Imagine printing Bitcoin. No mining rigs, no intricate cryptography, just pure Wall Street engineering. That's exactly what Michael Saylor is doing right now. His company, freshly named Strategy, already owns 553,000 Bitcoin, more than $53 billion worth. But that's just the beginning. On May 1st, 2025, Saylor unveiled his groundbreaking 4242 capital plan, an $84 billion bet to acquire almost 1 million more Bitcoin. If successful, his publicly traded stock will control nearly 7% of all the Bitcoin that will ever exist. Unbelievable. Just a few years ago, Strategy was an ordinary software company selling analytics dashboards. Today, its core business model is stacking Bitcoin, or as we say, stacking sats, lots of them. Since August 2020, Strategy has quietly accumulated more than 500,000 coins at an average cost of around $68,500 per Bitcoin. At current prices, nearly $97,000, this stash is already valued above $53 billion. Michael Saylor calls Bitcoin digital Manhattan, finite, scarce, and protected from inflation. But the critical question isn't why Saylor is buying Bitcoin. It's how he continues raising billions of dollars to do so. I mean, don't you guys ever wonder where the unlimited money supply seems to come from? Michael Saylor is not your typical executive. Educated at MIT, charismatic, kind of, artistic, yep, and unapologetically bold. He stepped down as CEO specifically to become the full-time evangelist of his Bitcoin strategy. Under his guidance, the company has not skipped a beat. It now defines itself by Bitcoin. But even the greatest visionaries can't create billions from thin air. To understand his success, we need to look deeper into his financial playbook. And that playbook has Wall Street playing right along. Strategy's first financial innovations come from something known as a convertible debt, bonds that pay zero interest. Investors buy these notes because they come with the right to convert the debt into shares if Strategy's stock price rises significantly. The more volatile the stock, the more valuable this conversion right becomes. Investors essentially lend billions at zero cost, betting on future gains. And so far, that's worked out very well. Strategy pockets that free cash immediately, buys more Bitcoin, and repeats the cycle whenever investor demand spikes. But that's only half of this financial engineering machine. On May 1st, 2025, Saylor revealed his biggest move yet, the ambitious 4242 capital plan that involves raising $42 billion by issuing new shares and another $42 billion from additional convertible debt. Together, that's an increase of $84 billion war chest dedicated entirely to buying Bitcoin. At today's price, that amount would secure approximately 875,000 coins, pushing Strategy's holdings close to 1.4 million Bitcoin, nearly 7% of the entire future supply. Here's how it works in simple terms. Strategy steadily issues new shares whenever stock trades at a premium relative to the underlying Bitcoin it holds. Investors gladly pay this premium, essentially buying each dollar's worth of Bitcoin for more than $1. Because Strategy stock moves faster and farther than Bitcoin itself. At the same time, Strategy continues issuing zero interest convertible bonds, further reducing the cost of capital. Both streams, equity and debt, flow together, creating a virtually unlimited Bitcoin buying mechanism driven by investor enthusiasm. When confidence meets volatility, things accelerate. This dynamic creates what finance experts call the flywheel effect. Strategy raises cheap capital, uses it to buy Bitcoin, Bitcoin's price increases, Strategy stock climbs even faster. And as the premium grows, raising more money becomes even cheaper. Each spin of the cycle makes the next one easier, faster, and more lucrative. But what happens when others copy the blueprint? The financial success of strategy hasn't gone unnoticed. Enter 21 Capital, also known as 21 Co., a major newcomer backed by crypto giants like SoftBank and Tether. It plans a public debut this year with a sizable Bitcoin treasury and the same financial model, leveraging equity and debt to accumulate Bitcoin. Strategy's approach has inspired similar actions across sectors, from medical technology to global conglomerates. Saylor's pioneering playbook is now being replicated, marking the beginning of a broader trend. But my friends, I must tell you, every bold strategy carries a hidden danger. Leverage supercharges gains, but also amplifies losses. If Bitcoin's price drops significantly below Strategy's purchase average, the premium investors pay for its stock will vanish. This could make refinancing debt much harder, forcing Strategy to sell Bitcoin to satisfy creditors. Selling Bitcoin during a market drop could push the price even lower, creating a downward spiral. It's just as powerful as the upward flywheel that created its success. In simple terms, the same mechanism that built the empire can cripple it. So far, the market is rewarding the boldness, but we also must fear what happens when we see a massive unwinding. Over the past 12 months, Strategy's stock has surged around 133%, significantly outperforming tech giants like Tesla, Nvidia, and Apple, often called the Magnificent Seven. Investors have flocked to Strategy, treating it like a turbocharged bet on Bitcoin. The market has made this once modest software company into the ultimate high beta stock. With institutional adoption of Bitcoin accelerating, exchange-traded funds launching, and corporations converting balance sheets, Strategy's momentum shows no sign of slowing. If Bitcoin continues its rise, the 4242 Capital Plan could cement Strategy as a legendary success story like Berkshire Hathaway of digital assets. If Bitcoin falters, leverage could bring rapid and severe consequences. Either outcome will redefine corporate finance for years to come. Strategy has led a corporate revolution no one anticipated. Will this become the first $1 trillion Bitcoin treasury or a cautionary tale of financial excess? And my friends, I must remind you, this isn't the first time the crypto industry has looked to one man to buy up an enormous amount of Bitcoin in order to pump the price. And last time that happened, things didn't end up so well. In early 2022, Do Kwon from Terra Luna, his nonprofit, spent $3 billion buying Bitcoin, eventually amassing 80,000 Bitcoin to back the UST stablecoin. He was hailed as a market-saving hero while the spree lasted. But when Terra UST unraveled in May 2022, the LFG nonprofit emptied those reserves in a failed rescue attempt. The forced selling helped drag Bitcoin from the low $40,000 area to the high 20,000s and kicked off the cycle's broader capitulation. And Bitcoin continued to fall from there. So, guys, let me know in the comments down below, is what Strategy and Michael Saylor doing a good thing, or inevitably is it going to cause one of the biggest unwindings and the biggest risk to our industry that we've ever seen so far? Definitely let me know in the comments below, because this is one of the most heavily debated elephants in the room, if you will. And guys, if you enjoyed exploring the high stakes world of finance together, make sure to subscribe and stay tuned for the next breakdown. The Bitcoin chessboard is evolving, and this is only the beginning. And of course, ladies and gentlemen, do me a favor. If you got value from the video, make sure you hit that like button, share the video with friends and loved ones. Until next time, stay sharp and keep stacking your Bitcoin or Satoshis.